All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Some day here for the market here today. We have seen, we saw the data come out and the market slide on the data, and it just hasn't let up. You can see here on S&P futures, this is the last month. Going and setting a new little bit of a low, right? We've had this kind of lower lows coming in on the last several kind of news elements. And are we going to see a little bounce from this area? We'll see. But so far today, we haven't seen, a lot in terms of bottoming volume or anything like that. Now, it is the first day of the month. Normally, we do see some sort of rally come in on the first day of the month, but we have not seen one, really come in here just yet. Sometimes when we don't see it come in, we will see it come in the next day, but that's not always the case there. It looks like my Thinkorswim decided to lock up here on me. All right, let her spin a little bit while she adjusts here. There we go. But you can see, and I'll zoom in. You can see here on S&P futures chart, there's no real high volume bottom. We've just kind of had this, kind of rounding element coming in today. But we still, it was only, 20 minutes ago where a new low was set. So, still a long way to go here in the market today. But, that ISM data completely, kind of changed the tone, and we've seen the markets fall off pretty much the entire day here since. Okay, all right. Now a couple things to go and take a look at here today. We need to go deal with the challenge, and then we're going to talk about option selection, and then what to do if a trade is missed. And I want to kind of preface everything with just saying the things I'm going to talk about today, they're all challenge related. Right? This isn't, some of the things I talk about, they're related to how the challenge operates, not how, you should go trade, a 20% option position in an IRA account or something like that. They're challenge related. These aren't hard, fast rules to apply anywhere you go in terms of trading. They're not things to apply to stock trading and things like that. They're all very challenge related. And so just bear that in mind as we go forward. But let's get the challenge updated here. We have Home Depot option at 640, and we have Intel option at 145. So 640 and 145. So that puts us at about a $230 loss here for the challenge so far, which for most for two kind of sizable down days, I'll take it. Both positions are still, they're still valid here. Home Depot, the price of the stock right now is $231.73, and $231.73. So we've seen the stock go up by about $1. We have a $50 gain. So we've had a little bit of time decay, obviously there. With that, but it hits our auto exit red date right now. Okay, so if our stock price were green, our option price green, I'd have to take a look at pulling that off. We do get into a little bit of gray area when the stock price is green and the option price is red. We get into a slight gray area. We hit that 3 times last challenge. And, that's just where I make a decision. Am I going to hold or not? And it's, not a game-changing decision. None of those decisions last challenge, made a hill of beans about anything. But it is something where I'm holding Home Depot here. If Home Depot were to sell off tomorrow and go red by tomorrow morning, I would have to pull it off here as the auto exit date has come. All right, but able to hold it, where it sits right here. And then Intel. Intel is trading at, 50.85 right now, and our stock exit level's 50.43. So we're still in position there. Hopefully that holds on for us, and we can see it right the ship and reverse back the other way here, and get the trend that we saw triggered could possibly happen. So no changes to be made here with that. There are no new challenge triggers on the board right now. We still have Boeing with the downside 3.7 crossover. I'll show you the 3.7 crossovers to the downside. We have Boeing, Honeywell, Intel, Juniper, Microsoft, Verizon, all with 3.7 downside crossovers here on them. Intel reversing yesterday's. Intel's in a very interesting position. Intel's in a position where if it were to go up tomorrow and cross over to the upside, we get a secondary bullish signal, at least most likely that we get a secondary bullish signal. We had that happen to a trade last challenge. We've seen it happen over the several years that we've been putting this together, but it isn't triggering bearish on today's action. The consolidation risk component is too high, and we would have to see that consolidation risk component, drop a little bit, to see a secondary bullish signal tomorrow. But I suspect if we see it rally 30, 40, 50 cents, we would see that. All right. So that's challenge. Pretty simple, pretty easy, to run with, and pretty easy to make decisions with, and not a lot of wiggle room, right? It's everything with the challenge is geared towards playing with the odds, and it's one of those where I get to sit back and root for it. And for as much as I look at something, I go, well, maybe I should do. Playing the odds, and the odds, continue to say, hey, hold on, and let's go here. All right. But what today's options, and how they're moving, right? One of the things that it does is it brings up this idea of option selection and why choose this option over that option and everything else. And if you've been part of prior challenges, you'll remember that in many cases, I've gone out and traded things like the 2-week option, right? I'll come into something like Intel, and instead of buying 31 days out, I'll buy the monthly 17 days and, go ahead and get into the 51s or excuse me, the 51s yesterday, for instance. And, it's one where, okay, stock doesn't move all that significantly here today. We're not talking about a monster move for the stock, but the option value is down 30%, right away. And it's in a position where, okay, if it snaps back, great. But if I hold it and it takes one more small dip, what's going to happen to the option value? It's going to get clobbered, right? And so one of the things that we really wanted to do when putting together the challenge algorithm is we wanted to strip out the trades that go to zero. We wanted to strip that out. Now, me personally, I don't care. I mean, I trade all the time. I have trades every single month that go to zero. I'm more than okay with it, right? I understand the risk factor, and I get reward factor by having some of that element, right? But one of the things that has been perhaps one of the bigger complaints, with the challenge over the years, and even when challenges have gained, is when trades go to zero, and it puts a very sour taste in most people's mouths. And I'm not saying that I enjoy it, right? But I do understand that kind of sourness and everything else, and there's no way to take that out 100%. Right? Yeah, there's no way. I mean, we could wake up tomorrow, Intel could be bankrupt, and the option's going to go to zero. Right? I can't totally strip out that risk. But what we did is we played around with different options and different option choices to say, look, can we get the reward potential that we need for the challenge? Because the challenge needs the reward potential while still maybe keeping it from having trades go to zero, keeping it so most of the trades, worst case scenario is about a 50% loss, but most trades are in that 20 to 25 to 30% loss area that makes more logical sense. And, of course, we can do that. We just buy an option that's deeper in the money or an option that has more time. And so, when the stock moves, the loss isn't going to be as much. But what it's going to do is it's going to take away the reward potential, right? It's going to take away that reward potential. So we had to kind of go back and look at the system and say, okay, We have to tweak this system so that we're not just looking for a small move, right? We're looking for the bigger moves. So, last challenge, one of our early trades was gold. We bought gold right here. We got a nice rally on gold. It was early in the challenge, so the way we had the options, we weren't able to continue to hold it for further rally. But you know what? We caught a move that was outsized relative to what its recent moves have been. And we have to find high probabilities of those things happening in order to really pay off the challenge and keep options from going to zero. So what happens? Well, what happens is that initially as an option trades, right? If we go to Home Depot, as this option trades, right, we're not seeing it move a heck of a whole lot. Home Depot is not moved outside of its average true range. And so the option really hasn't had a big gain, hasn't had a big loss on the ups and the downs, right? It's trading within that $100, $150 area, and we have $1,200 on the trade. And that's what we want. That's what we want to see. We don't want our option to be super responsive to the first dollar or two movement or the first half ATR. We want our option to be semi-muted at that area, and then once we get half an ATR, and we start to get into two ATRs, right? And what do I mean by ATR for quick review? An average true range. So the average true range for Home Depot right now is 370. So, once Home Depot starts to move above, our entry price by about $2, that's when we expect to start to see some gains coming in. And, that next ATR really kind of pile in the gains. And the way the Home Depot option is structured, that's what we will see. If Home Depot goes and hits its price target of $238, we're going to see the option put in about an $800 gain. Now, it depends on how soon, it does that or whatnot. But that's just its initial price target. And we would be able to continue to hold a portion from there to continue to look for, further gain from that point in time. And so, okay, we can do that. We can manage that short-term risk. We can survive the chop, right? Because if I go in and I go in yesterday and I go buy a real short-term call option on Intel and I put $1,700 on it, that option is now worth what? $1,100? Depending on the option I choose? $1,000? Now I'm sitting here with a decision. Well, do I pull it off? What do I do? If I hold it and Intel decides to dip tomorrow, you know what? At that point, my option's worth $400. And all right, do I sell it or do I just wait for it to come back? Right? Left with just a lot of nasty, hard decisions that nobody wants to make because there's just not a right answer. It's one where, all right, if you hold it and it goes to zero, why'd you do that? If you sell it and it snaps back, well, man, should have held it, right? You're always on the opposite side there. And so we really wanted to take that out. And so, we found that this 30 to 60 day time period, right around the money, seems to work the best in giving the most kind of dampened initial responses, but yet still having sizable responses to a 1 and 2 average true range move on the stock. And that's what we want, and that's why we choose the options that we do. And so far it's worked out very well for us, and we'll expect that it continues to going forward. Now sometimes there's some things that happen, right? Like Intel yesterday, the option had earnings priced in, so okay, do we look at it just a little bit differently? And yeah, I just upped the exposure just a little bit to get the risk reward in balance to what we want to see. And so you'll see me tweak things occasionally like that. Sometimes I'll be first strike in the money, sometimes I'll be first strike out of the money when it comes to the options. Sometimes it's closer to the 30 days, sometimes closer to the 60 days, but it's all a part of getting an initial dampened delta where the delta is kind of low initially, but as it moves those two average true ranges, that delta can increase substantially and put on some sizable gains here for each challenge position. All right. So hopefully that helps kind of understand the option selection there, and why we chose those options. If we go like 90 days or further out or deeper in the money, we just lose the reward potential, and that's the wrong side, right? The challenge needs to have that reward potential. And anytime you're talking about taking risk off, the other side of that coin is losing reward potential. And so can we take that risk? Can we shave some of that risk off, yet keep the reward potential? And that's what we've tried to do. And that's, what we've been successful at doing, and, why we choose the options that we have. And while we will continue to do that. And you'll notice here in the challenge setup, options chosen are 30 to 60 days till expiration using the closest at the money strike price, right? And I probably should put a star in there and say, for the most part, right? For the most part. Okay. All right. Now, the second thing is, what to do if missed a trade. So, as we go forward with the challenge, other people are following, right? There are many people following, the trades, and they get the alerts and they decide if they want to get in. And there's all sorts of people out there that some that are just, following exactly. They go in, they put the fill price we got in as a limit order. If they get filled, they take it. If not, they skip it. There are others who look and they buy more, others who use it to buy stock on the trade. There's quite a variety here. But the bottom line is the challenge always has and always will be something where I show you what I'm doing. I'm not issuing a trade recommendation. I'm not issuing a, hey, you know what, you got to go get into this or else, blah, blah, blah. I'm showing you what I'm doing and showing you the foundation of why I'm doing it, the risk that's involved with doing it, the reward potential that's involved in doing it, and doing it in real time. Right? Now, one of the reasons we've chosen the entry times the way we have, well, the biggest reason is, for our customer base to be able to follow, right? If you know that trades are coming at one of two times a day, right, it's a lot easier to follow. It's a lot easier to get on with life and to, do your own thing. Yeah, for those day traders out there and those that want, fast trades and, hey, what's Jeff thinking all the time? No, that's not very conducive, but that's not who we are. And so, giving those consistent time periods to help follow. But even with that, it's still missed, right? Sometimes the stock will move. Sometimes, hey, you're out that afternoon. We happen to make a trade, an entry, or exit. And bottom line, right? Bottom line is I will never say, yeah, go get into that. Oh, you missed it. Yeah, go get into it now. Or no, don't go get into it, right? I can't do it. From a legal standpoint, I simply can't, right? And so it's one where I have tried to provide all the information for how we are structuring it, right? And how we are going forward with it. And with this information, you can take and say, all right, does it fit your risk-reward parameters, right? I mean, here's Home Depot. Let's say you missed the Home Depot entry and you're looking to get in right now. Okay. The trade right now is going for about 640, at least it was 10 minutes ago, right? Going for about 640, right? We got in at 615. Well, that's a $50 difference. Okay. Do you want to get in, right? These are our price levels. These are our auto stop dates, right, when we will be making a trade. So, yeah, there's a chance you could get in this afternoon and I have to get out tomorrow morning, right? But you can come in and kind of just see exactly what is going on. And, okay, do I have a little bit of extra risk? Do I have a little bit of less? Do I have a little less risk? And be able to kind of take it from there. And that's one of the biggest reasons for setting it up in this fashion is so, everybody can kind of see exactly what's going to happen. There's no question to, what's Jeff going to do? When's Jeff going to do it? This happened, so now what? Or this news happened, so now what? No, it's all price action based, and it's all in here just to make it easier for everyone to make decisions for themselves to say, hey, you know what? I want to make this trade, or I don't want to make this trade, right? Okay, I get into Intel. You decide you don't like the trade. Fine, don't get in. right? It's not something where I can go, well, you missed a trade. Here's a makeup trade, right? If I were that, if I were that good, then, well, never mind. That's just not very realistic, right? But you will continue to see me trade the challenge signals, right? You can take another challenge trigger and trade that if you'd like. But the way this is set up is also dollar amount independent, right? If you want to set up the challenge and you want to start with 2,000, or you want to start with 20,000, or you want to start with 18,000, or whatever dollar amount you want, 7,777, you can go in and do that, because none of the decisions are being made based on the dollar amount value, except for, hey, I can't get into a certain option because of it, right? Other than that, all decisions are being made based off of the stock, so you can go and put the exposure level to the same as what we have here, right? So Home Depot, I put about 40% in. Intel, I put about 60% in. We're all in, go, and you can give yourself that exposure depending on the dollar amount that you have in, and that will work even as we go forward, right? When this challenge hits 15 grand, right, you can still trade the signals in the challenge starting with 3 grand. If you'd like, and still be able to have the exact same principles. Yes, the rewards won't be as great, but the risk won't be as great from that point. But it's very easy to scale. It's very easy to come in and look and say, hey, all right, do I really want to get into this? Am I too late or not? Okay, it's a $50 difference. You know what? I'll sit this one out. Or, you know what? It's a, big difference. So, all right, I'll jump in, or whatever you want to do, right? If we go and look at the last challenge, right, and I've pulled over the data here, there are not a lot of trades in here that were make or break the challenge, right? And it's one of those where you can see $590 gain, 132 loss, 600 gain, 342 loss, gain. I mean, it just nothing that really made the challenge, nothing that really broke the challenge. And that's what the trades are supposed to be. Now, we'd like to get a few more of the Under Armours than the final Disney. But, that's the way they are supposed to be. And so, okay, miss out on one, no big deal, right? It's not that big a deal. All right, you can decide next one what you want to do, or, based on what you have, based on your risk tolerances, and, what you find, to be acceptable there. My opinion on the trades, right, doesn't change. When the trade is made, my opinion on the trade is right here. Everything that I'm going to do on the trade is right here. Yeah, there are a few, small exceptions that will happen once in a while, right? But for the most part, 95% of the time, this is what is there. This is my opinion. And you know what? Home Depot opening up $1 higher and then being $1 lower and then closing flat isn't going to change my opinion on it, right? This notion that every move in the stock, every small move in the stock has to mean something, I don't subscribe to. Movement outside of the ranges that we are looking for, that we have built into the algorithm, those are the ones that I find significant, and those are the ones that, I will be reacting to. So it's not one where you have to go, oh, I wonder if Jeff's thinking something different now. What am I thinking right now with Intel? You stupid stock. Come on, let's go. Right? I'm in a position where the algorithm's running, and I'm rooting for it. Right? I know what the risk factors are. I know what the reward factors are, and I'm rooting for it. But my actions are right here. This is what my actions will be with it, and what they are here with it. Okay? So hopefully that helps as far as the option selection. What to do if you miss a trade, and just kind of be able to go and make a decision there. Again, if you ever need help, shoot an email over to support, and they can help you out there. But As far as my thoughts and everything else, you'll continue to see. I'll jump on video. I'll make a comment here and there about it, but you'll notice I'm not sitting here on video breaking down the candle and breaking down, what did the hourly chart look like and what did the 5 minute chart look like, and yeah, could I do it? Sure. Is it going to matter for the challenge? Not one single bit. All right. Thanks for hopping on. Thanks for being with us here at Trader Minute. Looking forward to a fantastic challenge, but we'll survive some of the chop here when we start to get some movement. Be very, very nice, and we will get off and rolling to a strong end of 2019. Again, thanks for being with us, and we'll talk to you later. Take care.